seasons of identifying champions, 10 seasons of recognizing excellence. Hello and welcome to Leaders of Tomorrow Season 10. I'm Sananda Jayasheelan, and all of this month and all of this year, we're going to continue bringing you some of the biggest expert voices as we help you in your growth journey. Tonight, we're counting down to the budget with some of India's foremost economy minds. Let's dive right in. On the show tonight, Gurucharan Das, author and economist, Aditi Nayar, Chief Economist ICRA, K Joshi, Chief Economist CRISIL, Ajay Mahajan, MD and CEO, Care Ratings. Gentlemen, Aditi, thank you so much for joining us here on this pre-budget panel discussion, talking about all the cues that India's small businesses should be watching for. And it's great having you as we're kick-starting the 10th edition of the Leaders of Tomorrow, India's longest running platform for small businesses. And our aim definitely is to educate and inform India's SMEs, MSMEs, and startups. And what better way to do it than to bring together, minds like the ones that we have on today's panel. So I want to thank the four of you again for joining us today. I want to start perhaps with you, Mr. Das. And I know things are changing every day as we speak, but sitting where we are with the information that we have as of now, what perhaps is the outlook you would say for the rest of 2022? Could we expect some sort of calm, still waters, or is it all going to be highly volatile for 2022?
Well, you're asking me to look into the crystal ball that's been made very uncertain because of COVID. So it really all depends on this. And clearly, at least for the next few months, even the budget will have to be mindful of this third wave, and the action that will be required will be the standard one, which is, frankly, the best answer would be an infrastructure push. Okay. At this point, the private sector is not going to invest because the private consumption demand is weak. And so fortunately, the government, I think, is aware of it, and they've got this Gati Shakti panel, which is an excellent vehicle for monitoring. And last year, the government, we put in 30% higher investment in infrastructure, which was good, although it's not been spent, which is the weakness, which is a bad thing. But I think we've got to remember that it's infrastructure that will create jobs. It will, It will crowd in private investment, which will create jobs, in fact. So second area, I think, is that the government has to restore its reform credentials in this budget and this coming year. After the farms fiasco, there's a lot of skepticism, and clearly some actions will have to be done, and shown in the budget that they are being done. And they have been, frankly, the biggest thing that is in jeopardy after the farm laws fiasco is electricity reform. Mm-hmm. And nothing could be more important to India's future than the reform of the state electricity boards, which was underway, frankly. And then they put these 4 clauses and pull the rug under it. So that was the tragedy of the farm laws, is that, not the farm laws reform. But hopefully we have learned something from this whole experience. If there's time, we can talk about it. But we've learned something. There's a lot they can do on the farm laws in going forward. Overall, I would say what we need is, from this budget, a overall picture of how to get growth and how to bring jobs.
Sure. Aditi, like Mr. Das is saying, crystal ball gazing at a time when everything is so uncertain, it's a bit of an unfair task. But one thing perhaps that you would say is your outlook for 2022.
But I mean, certainly, the budget and all economic decisions have to be taken at this point, assuming that there's going to be a fair amount of uncertainty going ahead.
Yeah.
There's just no getting away from that, which is what this sudden flare-up in the third wave in Omicron has taught us. So from the budget specifically, I completely agree with Mr. Das that it has to focus on as much growth supportive expenditure as possible. And the best way to do it is to give a major push to capital spending, especially on infrastructure, because that's the best bet that we have to really be able to pull in a virtuous circle in terms of getting more jobs, growth, consumption, and confidence back in the economy. So my broad, comment on capex is that looking at the experience of the last couple of years, even specifically looking at the month-to-month capital outlay that has actually taken place in FY22 so far, perhaps what's a reasonable number to include in the budget is about 50,000 crore per month. So 6 trillion is something that we should be at a very minimum looking at for the expenditure budget. So capital spending. And on the revenue side, the PLI scheme, that is something that must be fully accounted for, because again, for exports and for pushing our own manufacturing, that's something that is an extremely important vehicle going forward. On the specific items that are a security net in case of another flare-up in FY23, the two most important things are the free food program and NREGA. My belief is that the budget should be prepared assuming that we don't have another wave in FY23. So we should have a normal level of food subsidy and the NREGA being accounted for in the budget itself. If there is a requirement to give a quick dose of confidence and sort of consumption support to the economy, then we can always go ahead with larger allocations for these schemes in supplementaries in the future. And I don't doubt that if required, those will be made available. But I don't think the budget itself should be prepared assuming that we're going to have another wave after Omicron, which will come in FY23.
Absolutely. Mr. Mahajan, if I can come to you for your quick opening comments as well.
I think I'm clearly in agreement with what Mr. Das had to say and what Ms. Nayar had to say. Clearly, the government will have to be the biggest spender into 2022-23 as well. Yeah. We are clearly seeing the capex cycle in the private sector not really turn for the better yet. And apart from infrastructure, I think the government and maybe green energy can be counted towards infrastructure, but all the pledges that have been made by India at the COP26, I believe green energy continues to be a very high priority. And by 2030, now they've upped the target to 450 gigawatt. I think, a real push in that direction. Apart from infra and green energy, I think there will be also a significant accent on technology-led facilitation into multiple sectors. Education, healthcare, startups, entrepreneurial support from the government, maybe some tax concessions to startups. So all of that should augur well to offset the lack of investment coming from the private sector yet, and the volatile environment, at least I foresee in 2022-23. Indian government bonds were at 5.80% 10-year yield no more than 6 months, 4 to 6 months ago. We are today talking 650, 660, and the 14-year, 15-year bonds are at 7%. So I think all of this will impart further interest rate driven and foreign exchange driven volatility as well to the overall economic environment. So it will be a volatile year.
Volatile year. Mr. Joshi, your opening comments as well. Would you agree? Volatility is really going to stay here now in 2022.
Well, I think it is bound to be there wherever there is uncertainty that leads to volatility. But I think the major cause of uncertainty and volatility is Omicron. I mean, which made a wildcard entry as we stepped into the last quarter of this fiscal. Well, we all know that the uncertainty is about on account of Omicron or in general, I mean, they are not good for consumer sentiment and also not good for business sentiment and typically delay the investment cycle. Well, having said that, I think we can take succor from the fact that the previous waves, even if they have created a lot of health scare, they haven't been found to be as damaging for the economy. So we have more vaccinations now as we brace up for the third wave. We are also learning to live with the virus with progressively less stringent lockdowns. And so I think that what that means is that the impact will be there, but it won't be as pronounced. I mean, and what will get impacted most is the contact-based service part. I mean, which already is getting impacted as the stringency of lockdowns. I won't call it lockdown, containment measure goes up. So I think that's, and we have retained our growth outlook at 9.5% for this fiscal year.
I'm going to slip into a short break on that note. Back in just a moment. Welcome back. You're that's here on Leaders of Tomorrow.
This next question is open to everyone on this panel, but maybe I could come back to you on this question, Mr. Joshi. And I just want to read out some data that we have as far as the impact on small businesses out of the first and the second wave is concerned. Studies and surveys showing that approximately 95% firms, small businesses, were impacted negatively due to the national lockdown, which was in 2020. 70% of businesses remained disrupted till end of 2020. Even after progressive unlocking, reports suggesting that nearly 40% of businesses have seen some sort of an impact. This was till mid-2021. Mr. Mahajan spoke about tax concessions to small business. If we are going to see some sort of continued handholding for small businesses, in your opinion, what should that look like perhaps? And what likely is going to be the impact on, SMEs and MSMEs going forward into 2022?
Well, I think obviously what pandemic has done is it has created a dichotomy in the economy. It's not only the SME versus the other industries, it is the small versus the large in general. I mean, the bigger companies, they're deleveraged, they're doing well, their financial profiles are better. So in that scenario, I think the small firms, including the SMEs, I think they would require handholding. The ELGS scheme actually was a very positive scheme and it helped quite a bit. I mean, just imagine if it was not there, I think the strain in the MSME segment would have been more. So maybe I think that will need to be extended. And I think the policy has to act as a bridge so that these folks can move to the recovery side. I mean, otherwise some of them have the risk of completely disappearing. So I would say that I'm not too sure of tax concessions, but definitely I think the other kind of support which allows them to sail through the storm that I think is currently again brewing would be needed.
Sure. Mr. Joshi was talking about a dichotomy between small and large businesses. I want to talk about the dichotomy between urban and rural India, where businesses are concerned. Mr. Das, maybe I could come to you on this. Rural India in the second wave, not so much in the first, saw a massive impact, and we need that revival to really come back in rural India for you to see the overall economy really coming back on track. What measures perhaps should we see to support small businesses and to support agriculture in rural India if we are to see the economy and economic growth coming back on track?
Well, the best thing we can do actually is to get these farm laws implemented state by state. Agriculture is predominantly a state subject, and that was the mistake that was made in the way these farm laws were implemented. We have learned that lesson, at least in the BJP ruled states. They should push the implementation, because a lot of the farmers there, most of the farmers are happy to get the benefits of the freedom that these laws provided. And a law like the Essential Commodities Act, which is a central law, not a state law, that can be passed anyway that doesn't depend on the states. Plus, I would say another thing, a special package. This is, Vijay Kelkar has been talking about this, a special package for the Northwest, for Punjab, the states that were protesting, Punjab, Haryana, to wean them from this low equilibrium, riskless farming situation that they are in. And it's a problem created by the government, by the state. It created 50 years ago. But the fact is that this package, Niti Aayog should work on this package, and they should offer this package, because Punjab and Haryana are very vibrant farming communities, and they will respond to get out of this vicious cycle of too much water, too much electricity, ruining the soil, ruining the air, all that they are doing. The biggest lesson from the farm laws, why did they get repealed? They got repealed because of elections in UP.
Sure.
And I'll quickly finish this point, but this is a crucial one.
Sure.
All we need to go to simultaneous elections. Politics cannot hold the economy to a hostage.
Sure.
And so this idea has been mooted for many years, that to have, and my idea is, hold this on a fixed date, the election for the central government, that is for parliament,
Okay.
and 2.5 years later, all states together hold an election for the other states. And then at least you have 2 election cycles in the country instead of a cycle every 3 months. We're in an election mode. So these are some thoughts I wanted to offer you.
Sure, sure. I just want to come back to talking about the MSMEs and SMEs, and this question is for Ajay and Aditi, but it's open to everyone on this panel. The 3 biggest challenges for an MSME in the country today is overall productivity, is access as far as the market is concerned, and access to finance and easy finance and availability of credit. I want to pick up on the last one. Bank lending to SMEs and MSMEs has always been on the lower side and has been even further impacted now during the pandemic. Given that we're possibly not going to see as much of a revival as we were hoping to just a few weeks ago, how can small businesses ensure that their productivity is maintained if banks are going to continue to be shy when it comes to lending to these small businesses? What is the impact, if any, you're expecting as far as bank lending is concerned?
Yeah, so if I could go with that, Sunanda, I think this is a very important and very sort of moot question from a banking perspective. I think what has happened really is in the last few years, probably the last decade, didn't go very well for the industrial sector, for the commercial credit, for the banking system. If you recall, way back in 2008-9, we had a massive growth in the power sector, and some of those assets became NPAs by 2012. Then came another challenge around mining, and then came another challenge around 2G telecom, and then came the challenges around demonetization, and then the NBFC crisis between 16 and 18. So I think the banking sector sequentially over the last 10 years has been hurt in terms of its appetite. And I think this is a point that keeps coming up in lots of policymakers' discussions with the industry. There is no easy answer to this, unfortunately. The NPAs in the banking system at an average hit 8.5%, now down to something like 7-odd%. But the fact of the matter is that within that also there is huge disparity between foreign bank NPAs and public sector bank NPAs and private sector bank NPAs. To cut a long story short, and I think the last 10 years, bankers have moved substantially towards giving credit to the retail sector. Personal loans are up to 30 lakh crores out of a total 109 lakh crore of rating of the total A and BC or adjusted net bank credit outstanding. Now, if you see, while there is nothing wrong with lending to the personal sector on an unsecured basis, the same amount of money is not available to businesses on the MSME and SME side. There, if an SME approaches a bank, chances are that unless there is substantial collateral that can be provided, there is very low risk appetite that bankers would exhibit towards lending to an MSME purely on their business risk. And I would conjecture one more guess. I think the in the banking side, as you know, there is a directed lending towards priority sector. Now, some of the MSMEs, the priority sector caps are for a certain asset value in the manufacturing and certain asset value in the services sector qualify for priority sector. I would say that, frankly, for the next 2 or 3 years, any company with a certain threshold turnover or lower should just simply qualify for priority sector assets for the banking system, thereby unleashing hopefully more credit towards this sector, which is a dire need. There is huge employment creation in that sector, and post the second wave of COVID particularly, a lot of that sector has withstood a severe stress. So I think that those are my thoughts.
Sure. Aditi?
I'm going to answer this in a slightly different way. I'm going to look ahead to what's going to happen about a week after the budget, which is the Monetary Policy Committee's last review for FY22. At present, the way that things are shaping up, we have a very tentative recovery in growth, and we've got fresh uncertainty that's come in because of Omicron and the third wave. At the same time, inflation is high in India, but it's still lower than the threshold that the MPC has in terms of its medium-term target. And because our target is so much higher than many other central banks, our MPC and RBI can afford to prioritize growth for a lot longer than many other central banks and continue to maintain a status quo at the levels that we are at right now for the repo rate as well as for the stance. However, if we look into FY23, of course, there's a lot of uncertainty, but the baseline expectation is that we will have about a 9% growth in GDP in FY23. Within this, if there is a continued threat of COVID in terms of future waves, perhaps we will see even more of an intensification of the K-shaped divergence that we've all talked about, that the large will, disproportionately gain in situations of uncertainty, as we've seen in the last few years, and the smaller entities are going to have to deal with that reality. But overall, our baseline expectation is that we will have a 9% growth. We've already seen commodity prices being extremely volatile over the last 3 months, but there has been some rebound even recently. And therefore, our base case expectation is that while inflation will remain within the threshold of the MPC's 2 to 6% range, it's going to stay elevated. And the moment that the uncertainty sort of eases and we see a more durable recovery emerging, the MPC at some point is going to have to increase interest rates. And with that, borrowers, whether small or large, will have to start getting used to higher interest rates over the course of FY23.
That's all we could pack into our show tonight. If you have any feedback for us, do let us know. Our contact details on your screens as we speak. Thanks for watching. Have a good night.